Hello and welcome to Pro Trader Strategies. My name's Eric Wilkinson. I'm here to teach you some different things about options and talk about the overall markets, but please implement that stuff in your portfolio in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, not really a whole lot to see here. We did get Italian retail sales coming in better than expected at 0.1%, expected to be a negative 0.2%. And then here in the United States, we got factory orders coming in at negative 0.5%. That was yesterday. I don't know what I'm looking at there. National Federation of Independent Businesses. It's a small business index on their confidence in and around the economy, and it came in line with expectations at 101.8, expected to be 101.3, so just slightly higher than expected there. But we did get the Italian retail sales, which was better than expected. All right, and later on this afternoon, or actually this evening probably, is a couple of Fed governors will be talking, and most likely about Fed policy going forward. Okay, so they're not in a blackout period where they can't talk about Fed policy. They probably will be doing that as far as I can see. All right. On to the overall markets. We've got crude oil now coming off just slightly. The overall oil market, gasoline market is really very volatile right now with Libya, OPEC, all these different wild cards out there around this product, just not really giving us a solid feel as to what's going on. Libya in turmoil, maybe pulling back on production. OPEC trying to get some sanctions going where they cut production. Russia doesn't really want to do it. Iran's probably not really on that cutting of production. They still want to kind of ramp up and make up for lost time when they were blocked out, if you will. Also, one thing to note, Iran said that the U.S. military is now a terrorist organization, so they've claimed that. That could cause some further turmoil over there in the Middle East as well. All right. Like we talked about, crude oil, after it blasted up higher yesterday or the last couple of days, we got above this 23 Fibonacci extension. We're seeing a little bit of weakness. I think that could be more along the lines of just some profit taking with the weak hands there. I think we might at least go up and test this 38.2 Fibonacci level right here, which coincides with the $66 a barrel there. All right, gold futures are pushing higher as well. We've had some weakness over in the equities, so these are the levers and pulleys we're going to see here. Oil sometimes does get a push higher when we see the equities kind of fall, but I think that there's a little bit of worry as to supply and the demand aspect, right? We know, we just talked about the supply aspect, where if we see some pullback in supply, that should drive demand a little bit higher. But if we see the overall economy starting to slow down, that demand gets driven down as well. So a lot of things with the levers and pulleys in that oil that isn't so much going to show up here with gold. Gold is a flight to safety type of instrument, whereas if we saw bonds and equities coming off, gold would most likely be the one that was pushing higher on that day. Okay, so now that we're up into that 13 handle, the bulls are going to be celebrating. We're above the value area high, but we've talked about this in the last couple of webinars at least. Right now, point of control is right here, so we would expect the market to want to pull this down. But as you can see here, we are only about a day or so away from moving this point of control higher up to this area. So, and that is right there at that 1300 psychological level that we've talked about. That's come to fruition. It's not a Fibonacci line or anything else, but the value area high started lining up with it. It is coming to fruition as a support and resistance, albeit only a psychological level one. That being said, I think those levels are just as important as some of these other Fibonacci levels as well. But now pushing higher as the equities are coming off a little bit. So we can move on if I can flip out of that one. Now we got the bonds, again, slightly moving higher again. With all of this being said, bonds moving higher means interest rates are looking to go lower. I don't think we're at a point where we really need to start cutting interest rates, but the yield curve inverted. So therefore, people are really getting a little bit worried about further down the road how these interest rates are affecting the overall economy. We've seen it start to slow. We've seen some housing numbers kind of pull back a little bit going forward. Bonds pricing in that the Fed has overdone it just a little bit. All right. So on to the VIX. VIX up into the teens again. Yesterday we started seeing it come off, but today with the equities coming, with some of this bad news leaking into the market, we're starting to see the equities come off. That is what we would expect from the VIX, is to start moving higher as people buy puts for protection. That is a driving force on the VIX, because as you buy it, that increases the volatility. All right. Then we've got the Dow Jones Industrial Average off by about 150 points. It's about 100 points off of the lows. We were testing the value area high, and we are just now above the 9-day moving average. We were below that for the better part of the morning with some of this economic data and stuff like that coming in. I thought it looked like we were really going to start peeling off and come back into the value area and maybe start migrating back down to that point of control. It's been defended. You know, it's like a Fibonacci level where we see the market come down and touch those levels, it starts getting defended. And I think that's what we're starting to see here right now. A little bit of late morning push as the bulls come out and are going to try to defend for the rest of the day. Now, we're going to look at the NASDAQ. The Dow Jones doesn't really show up because it doesn't really show the overnight session. So that chart looked a little bit funky. But we talked about this yesterday, that if the market was starting to look a little toppy here. And again, even with this doji being not really a counter-opposing doji, one's green and one's red. Usually what I mean by the counter-opposing dojis is when, and it signals a continuation pattern. When you get a doji that might be at the top of a move where it's a red candle, let's just say, and it looks like that, okay, filled in or whatever. And then the next day you get a counter-opposing doji where it looks like this and may kind of break down like that. Now that's usually a continuation pattern. The market wants to go higher. Right now what we've got is the red doji, or sorry, we've got a green doji kind of looking like this. You know, you got that doji, and then we're having a red doji right next to it. That, to me, is not a signal of a continuation pattern. This, to me, really is very topping. So I would expect this market to start to look to roll over the rest of the week as we're going forward here. All right, so let me pull this back down and get rid of that and move on. E-mini S&Ps, again, they are showing more weakness than what we were seeing there in the NASDAQ. Still negative on the day, but this is definitely looking more of like a confirmation of a top here. So I'm expecting the markets to start to roll over, maybe come back down as far as this level here, which is lining up with the 2800 level. Again, more of a psychological level, right? As we are not seeing anything else other than right here a spike in the market profile where a lot of time and volume has been spent. That's where people are accepting value. If we come back down to that area, we could easily see this shift higher. And when you start seeing all these shifts higher, that means prices being accepted at higher levels. People are more comfortable with higher pricing. Therefore, the market is in a bullish continuation pattern there. So it's going to be a tough row to hoe for the bears to try and beat that kind of momentum to the upside, all right? But that being said, levers and pulleys of the market, we could see this market roll back over. I don't think it's a straight move higher. I think we're going to roll back over, maybe come down, test this level before we start resuming, if the economic data really supports that. Now, I am overall long deltas. I've been looking at trying to add some short deltas, might be with SPY or something like that. At this point, I haven't really decided. Because we're moving into that earnings season, I'm trying to roll out of a lot of these positions that I've had that either are working or are not working. So just sidelines right now, keeping an eye on them and waiting for the next shoe to drop. Right now, I think that this market is looking to want to roll over at least to this level here, okay? So the 2800, I think, is going to be tested sometime later on this week, maybe next week even. All right, taking a look at the pattern here with the daily chart of the E-mini S&Ps, each candle being a 30-minute candle, 30 minutes then we change and overnight session is added into this, but each blue section is an overnight and day session for today, or that each day respectively. You can see overnight inventory was relatively flat, but coming into today with the economic data that we got and what we're hearing from across the pond, the overall markets just had a wet blanket thrown on them, and we've sold off. We're consolidating right now, but remember, we've talked about this. These points of control, previous points of control that have not been tested, should be looking to be tested, and one of them already has. The next one we're going to have is right around here. If I remember to set up my stuff correctly, then we would get that right. So let's just throw this up real quick. But you can see this point of control right here has been tested. Touch that one, bouncing away. Next ones to be tested are, like right around in here. So we would expect the market to want to come down and hit those levels as well. But that is a lockstep on a daily type of trade if you wanted to look for those previous virgin points of control to trade against, because the market wants to come back down and pierce those as well, or at least test them again. All right, that's about it. I haven't added anything. A couple of things that I'm looking at is EA Sports. Remember, I put on the iron butterfly around this trade. It was because I thought that we were going to at least kind of settle down in and around this point of control, which is what we've done. I'm very close to my profit target on that, so I have a working order in there right now to get out at about 60% of max profit, and going to play that out a little bit longer, but I think we're okay with EA Sports right there. And like I said, I might be looking to add some short deltas through SPY, the triple Qs, something like that, but I haven't decided quite yet. I'm just going to let this market play out for the better part of the day before I really make a decision on that one right now. All right, so that's all I got for you guys, other than if you can't take that, take it easy.